Hello everyone, this is Alexander Nikolov. Today I'm going to take a look at two markets. First, euro-dollar, the most exciting forex pair right now, and then I will look at S&P 500 stock index. So let's start with euro-dollar. The most important thing here is if you look at the daily chart, you can see that this pair is in a steep downtrend since it has been in steep downtrend since late October of 2011, and considering the strong downtrend with prices well below the declining 21-day moving average, so this downtrend is considered strong, one can expect further losses here. But as you can see, there are some severe overbought conditions on the daily chart. Of course, that cannot prevent further decline on the daily chart. But as you know from my a weekly article that I posted and sent to you in my newsletter earlier this week, a good approach when you have severe overbought conditions on a daily chart is to look at one larger degree chart, in this case weekly chart. So if we go to weekly chart, what we can see here is that the market is basically trading sideways. So you see here from 2008 top, you have one leg lower, one leg up, one leg lower, one leg up, and then another leg lower. So basically the trend is sideways. And this sideways consolidation, I believe, is eventually going to lead to higher prices to 160 level, something that almost no one expects right now because of all the talk that euro is going to collapse due to the debt problems in Europe. But this is what this chart pattern suggests. Most likely we will see a rise of the single European currency. And despite the current strong downtrend on the daily chart, if you go to the weekly chart, you can see that the trend here is sideways, and right now the market is heavily oversold here as well. So based on this, I would not chase the downside right now, even if I trade on the daily chart, because as you know, in our site we turned short here near 135 level back in November, and then with initial target at 128.70. So we covered our hypothetical short position on that we established in our daily analysis, not daily but short-term analysis rather. We covered this position here at 128.70, and since then the downtrend has been intact, but due to this picture on the weekly chart, I have decided to stay out of the market, and that's why my analysis has been mostly neutral, though I have admitted all the time that the trend is lower. But considering here this chart, eventually I expect to see higher prices. So that's very important message here. And let's go to the S&P 500 chart. Here the daily chart is very positive, the trend is higher. And if we go to the weekly chart, that's very important for the medium-term prospects for this year. As you know, first, for the very long-term prospects, I'm looking for a large broad consolidation between let's say 700, roughly 700 level on the downside and 1500 on the upside. This consolidation started back in 2000, and right now we are in a leg up from the March 2009 low, and obviously with the current price, it's clear now that this uptrend from the March 2009 low is still not complete. What we have here is one leg up, which is clearly corrective, then followed by a pullback, another leg up, which is shorter. You can see it's shorter than the first one, even a deeper pullback, and now it seems we are in the third and final leg up, which most likely will be shorter than the third leg up, the second leg up, sorry. And this means an upside target somewhere between 1400 and 1450 level. So I expect a top here, somewhere here later this year, followed by a sharp decline later in the year and definitely in 2013. So overall, the medium-term prospects are positive for the next few months to 6 months, but they are turning quite negative going forward. And based on this, because we have a fresh breakout here on the daily chart, of course, one can favor the upside here. You see the trend is higher, so one can favor the upside, particularly as long as the prices hold above this breakout level at 1265 level. So as long as 1265, we are in an uptrend. Even if the market declines below 1265, it will probably find support near 1240 to 1230 level, 1240 to 1240 zone, and we'll stage another move higher. So right now it's not a time, in my opinion, to turn bearish here. The trend is up, so enjoy this uptrend as long as it lasts, because it will not be for too long. It will be for a couple of more months probably or so. So that's all for today. If you have not read my long-term forecasts for this year, go to our website, trendrecognition.com, and click on the long-term forecast on the left-hand menu, and read what I expect for stock market for the next year, for the entire stock market. So thanks for watching, and I'll be talking to you again soon.